Hello guys, this is Thomas from FINEIGHT. Welcome back to another recap. And as you can see from the text right there, today is gonna be about midday scanning or continuous scanning throughout the day rather. Because only one of the trades I took today was from my initial watch list. The other two were not. So let's begin with the one that I was scanning for, or I had scanned for before the market opened, and it was Citigroup, which was giving up after bouncing off of the moving average 50 period on the daily chart, forming a rather nice formation at the break of 51 with the relative strength to the market. As you can see here, the S&P uh, did somewhat of a double bottom, while the Citigroup didn't move at all and was preparing to break the 51 mark. So I entered at 51.01, got a really nice fill there. And my first point of interest was the 51.15 mark, which was the high of the day, which the market broke and went as high as 51.3. And then everything changed. So after being stronger than the market, it actually, at this point, you can see the S&P pulled a new high at this very candle, whereas Citigroup only managed to squeeze out a lower low and was contained within the 51.2 area. So actually, what I did was reasonable. I I raised my stop loss to 50.8. So uh, this low ranging stocks tend to have every decimal point acting as a whole number. So it was below 1 cent below the decimal point and also below the moving average. So I kept some space for it to prove to me that it's really going up, and unfortunately it didn't. So I got out at, I believe, 50.76, so a couple of cents slippage here, but overall I managed to save on my stop loss as it went uh, several cents below my original stop loss, and later on went significantly lower. So saved money on that one. My next idea, sorry, was in Pfizer. EFE. I need to learn how to write. Okay, so Pfizer, same story. Later on in the day, it proved to be stronger than the market. Actually, you can see there was almost no gap, so I only stumbled upon Pfizer because I had it left over from my yesterday watch list, which sometimes pays off as it did for me. So you can see that the spider opened, went down, then tested higher levels, and then collapsed and made new lows of the day. Whereas, meanwhile, the Pfizer uh, opened, went up, and then consolidated, sticking to the upper level of the daily range. So that's how I knew that this is a relatively strong stock. So I entered my enterprise above 35.8 and got filled at 35.81. So again, a really nice fill with the stop loss just below here at 51.60, give or take 62.65. That was the area I was ready to let go of that trade. Okay, so keep in mind that this isn't a very huge mover, and the stop loss is rather large compared to the overall structure. And so I to reach 2 to 1, I would need as high as 36.2. Looking at the chart, this is a really, really far target. Of course, if you say that it's just 40 cents, it looks small, but trust me, for this market, it's really long. That's why I decided to take some of the profits just before 46, which is a whole number. And for this kind of stock, this will be a really a large hurdle on the way upwards. So indeed, I took some off there, and it jumped to as high as 36.15. Now keep in mind, my original target was 36.19, just 1 cent before the 36.2. So I got screwed over 4 cents basically. But that is the reality of trading. And seeing as the S&P started to make new intermediate highs, and the PFE actually not doing that because it was already a little bit extended at that time, I decided to move my stop loss up to the just slightly to the 55-69 area. And actually I decided to exit somewhere between 36 to 36.1, as I determined that this was really not a large mover for today. The volume was not picking up, and so eventually I exited with the other half at 36.6. Had I held until the end of the day, I would have made more money, but again, I would have been exposed 2 or 3 more hours, and that is not something you want to be in, because you have no guarantee that the S&P will behave like it did towards the end, where it just soared. And so had it not soared in the last 15 to 20 minutes, I would actually exit at worse price than I did. And lastly, let's look at the last trade of the day, and it was in CRWD. So this stock for the last 2 days was really, really really extended, and it was a high time that this stock went down and did a little bit of retracement and actually it did. Coming from the open, it just dropped about 7 points, and then it bounced a bit and was uh, really always bouncing off the VWAP, as I will show you here. So this line here is the VWAP, and the first touch was a bounce, and the second touch was indeed my idea going short again. And so I did at 92.8, just again 1 cent below, and my idea was to go to just above 92, which is a whole number, with the second half of the trade letting it go before 91.5. And actually it took a longer time than I expected for it to drop to 92, and so I decided, okay, so I don't have that much time left. The S&P started to behave really uh, in a volatile way, and although it was making a really nice drop, the CRWD actually didn't follow the spider as drastically. Uh, so I decided to play it on the safer side and exit it with the whole position at 92. And of course, just to piss me off, it went down as low as 90.7, give or take. Uh, but overall, I'm plus 2.2% almost for the day. So really excited. Uh, and considering the behavior of the SPY, I think I managed my trades really well today. You can never achieve that you will be the last one to sell here and the first one to buy. You will never use the whole momentum of the stock, and even 50% is a really nice number to aim for. So as always, thank you for watching. I hope this longer video will be worth your while. Some of the reasoning I had to manage my trades as I did. Please let me know how you did today, and I will see you as always in another recap. Thank you, guys.